Everyone, welcome to Officer 24/7. My name is Niharika Walia Bhatnagar and I am with you with the era of ABFM. So, what am I going to cover today? As promised, there are two chapters which require extra efforts. First is sources of finance, and the second one is capital investment decisions. So, these two chapters are going to take at least two classes. Rest everything would be covered in the given classes itself. Once we are done with this particular module, I'll move towards the revision of the same as well. So what am I dealing with today? Uh, my topic today is in continuation of module B, which has just started. So I'm starting with the area of sources of finance and financial strategies, everyone. Here comes the first question. It talks about the topic of internal accrual. Acha everyone, we have talked about internal accrual in the last class as well. Internal accruals are those accruals or that part of the money which you have saved, right? That part of the money which you are saving for the future. Sometimes you give it to the people, sometimes you don't, right? If you're not sharing, then that part is to be considered here. So in this case, the correct answer is going to be profit, gross profit, and net profit, then profit before tax and general reserve. The point is, you have to pay tax first. So one part is you have to pay the tax. So profit after tax and non-cash and dividend distribution and cash profits. Acha, the portion that you give is dividend. So technically, can I say the portion that I'm giving to the persons, dividend distribution is the portion that we are giving. So profit after tax and non-cash profits, this is the portion that we are supposed to keep. Okay? So the answer is actually C. Profit after tax or non-cash profits. Then comes why do regulators emphasize companies to retain a portion of their earnings? Regulators are emphasizing uh, companies to retain a portion of the earnings. Actually, there is a simple reason. Why do we save everyone? I'll be saving money for my future. I don't know what kind of things are going to happen, so I'll just keep some funds. Not from the point of view, okay, maybe some problem will come, but maybe like if I get a particular bigger opportunity, I don't want to lose it at that point of time just because all the money would be blocked in my business. So one particular thought is I might need money in future. So savings is that part. To limit shareholders' returns or to encourage investments in the company, to ensure management salaries are sufficient. Management salaries are basically dealt with whatever money you are earning. So technically, no, that cannot be the point. To discourage companies from making profits, matlab this is something which is just not possible. In this case, the answer is going to be to encourage investments in the company, because once people see that you have invested or you have kept your money already in the business, their faith in your business will not only increase further, they will also put money thinking, acha, if this person himself is putting money, that means this company has something, right? Earlier this used to happen. Now though there are no share market gurus. Earlier when a share market guru used to say something, na, people used to follow them blindly. Now though things have changed because of the demat account, the entire working has changed altogether. Now it's very difficult to fool people, but easy in terms of the technological lack of technological knowledge they possess. That's the only problem where people lag behind. Otherwise, I think it has definitely become difficult because people are now more informed. Okay, what is the reason companies raise preference capital? Okay, I told you there are two kids in a family, equity and preference. Preference is that spoiled kid who's always asking for more. Ki, mama, if you are giving pocket money, I should be given first. The part of the dividend. That is the part of the profit which they receive. That is their dividend. Before equity, they should be paid, and at the same time, at the time of liquidation of the company, when the company is dying, they should be paid before them. So to dilute the equity holding, nope. To increase the voting rights, to maintain control over the organization, or as a good source of funds for a long period. Okay, they do not dilute the equity shareholding because the preference shareholder has no voting rights. Then is maintain control over management they maintain, but this money is basically something which is a long term period good source. It's a very good source there. Then, under the current provisions of the Companies Act 2013, what is the maximum period for redemption of preference shares? This is something which is very important because in terms of shares, now we have two kind of shares: redeemable and irredeemable. I'm sorry. So the portion of the preference shares which is redeemable uh, is allowed in our country. Irredeemable preference shares are not allowed. Now, what do you mean by the term redemption? Nobody has asked me about it yet. Redemption means the amount that should be paid off. Okay, so these people should be paid off. 10 years, 15 years, 20 years, or 25 years. The payment to the equity shareholders is never made. Till the time the organization is alive, it is never paid. For the organizations which are dead, the organizations which do not exist, the organizations which are dying, for them there is nothing called redemption. They will receive the money. Okay, let me just simplify. Company issued preference shares. Company issued equity shares. Equity shareholder once has given money, his money remains invested in the organization till the time the organization is alive. When the company dies, all the assets are sold off, and whatever cash is received is distributed among all the people, the creditors, the preference shareholders, the secured people, taxation, there are government, everybody takes up the money. And whatever is left goes to equity. Normally, almost nothing. Preference shareholders are a little smarter. They say, dividend, give me before equity. If the company is dying, before equity gets the money, you pay me. But normally, what happens is, if you issue a preference share within the next 20 years, you will have to dispose this particular shareholding. 20 years, you don't have more than that. Within the next 20 years, you will have to get rid of this particular shareholding. That means the preference shareholders are actually like a loan which we can take for maximum 20 years. And for that, we are paying dividend as well, part of as part of interest. Equity shareholders are the true owners. That is why they have the voting rights. There is no defined dividend for them. There is no defined time by what time they will receive their money. So they are the risk takers. So why would anybody else get that particular right? So in this case, the correct answer is actually 20 years. Based upon this, there are many types of preferences, starting from on the basis of redemption, on the basis of convertibility, then on the basis of participating and non-participating. That means if they have a particular benefit of being a part of the surplus of the organization. And the last one is participating, non cumulative and non cumulative. When the company says that the people are putting money into the business, well, let me tell you, on the basis of dividend accumulation, they have cumulative and cumulative. Dividend on the basis of participation, if the company is getting huge amount of surplus, then they have participating and non-participating. Participating, non-participating, when we talk about convertibility, matlab the preference share which can be converted into equity shares, they become the actual owners. So that is convertible preference shares and non-convertible preference shares. Dividend, participation, convertibility. Three done. Fourth one would be what? On the basis of redemption. First one is redeemable. This is the only type of on the basis of redemption. The debentures, the preference shareholders which are allowed. The redeemable preference shares, and then we have irredeemable. These are not allowed in India. You cannot issue irredeemable preference shares, everyone. So the answer in this case would be what? The answer would be based upon redemption. The answer was related to the area of redeemable preference shares in this case. So that means this is maximum by 20 years. These people have to pay it off. So in this case, we are covering all the different types of preference shares. Acha everyone, if this class is helping you out now, then please don't forget to like it, because when you like these kind of classes now, then it boosts our confidence, and I feel like let's come up with something new. Let's discuss a little more important aspect of the particular studies, because people are there. They're watching us, they are letting us know about where we can work upon more and all those things. Huh? Chaliye. Now let's move on towards the next point. What is the advantage of preference shares? Increases real cost of funding, improves the debt equity ratio, provides security to shareholders, enhances voting rights. Why is it, preference share important? It doesn't improve the debt equity ratio. It is still there in the same way. It provides security to the shareholders, that is true. It doesn't have anything to do with voting rights, and there is not even something related to the area of real cost of funding. It actually, that is, improves the debt equity ratio. Let's see. Sorry. In the debt equity ratio, sorry, equity and preference are written here. If this part increases, you know, if we talk about this, this is say 12 lakh, and earlier I had 2 lakh of equity, and right now I just got 4 lakh of preference shares. Earlier it was 12 divided by 2, that was 6 is to 1, way too high. The company had a huge amount of debt. Now it is 12 lakh divided by 6 lakhs. So it would turn out to be 2 is to 1. Right? This is the ideal ratio. So it's actually improving the ratio. Yes, it is the answer. See, the most important thing is, if you cannot find something, why don't you solve the question and ask it? The point is, whenever you are learning these concepts, you cannot learn them blindly. This means it should not be something that you are ratifying a particular statement. Okay, acha, haan, this is what happens, this is what happens. No, try it out. Look at the particular topic, right? If you know the particular topic in and out, then you won't be having a problem. But if you don't know the topic, then there is a major problem. So in this case, it is the improvement of the debt equity ratio, and we have proved it here. How did we prove it? The debt equity ratio earlier was 6 is to 1. As soon as we introduced the equity plus preference shares, the ratio went up to 2 is to 1. Having 2 is to 1 ratio, that means you have lessened the burden of debt, and your equity portion has definitely increased, right? So in this case, the portion is debt equity. Acha, equity includes both preference and equity, everyone. It doesn't mean only equity. It means both debt as well as both preference as well as equity shares. Okay, where is it? This includes both preference shares plus equity shares. Got the idea, everyone? So here comes the next point, everyone. What's the answer for this question? What's the answer, everyone? What is the drawback for the point of view of equity shareholders? Priority in liquidation, possibility of management interference, or non-deductible expenditure, or creation of redemption reserves. Uh, Equity shareholder do not have anything which is determined as a tax deductible expense. Matlab whatever money they are getting, that is not treated as an expense for the company. When nothing stays in the company overall, but they are called the actual owners of the organization. So due to this reason, no, this is wrong. What is the drawback from point of view of equity? Acha, now if I'm looking at it from the point of view of equity shareholders, from the company point of view, it is non-deductible. Let me correct it. This is from the company point of view. I missed out on the point of view part. If I'm looking at the company point of view, from the company point of view, uh, these people will interfere because they have the right to sit in the AGMs, annual general meetings. So yes, these people are going to affect the control. And otherwise, non-deductible expenditures are something that is from the company point of view. So these are from the point of view of the shareholder, from the company as well as from the. Acha nahi. This is also nahi, this is also true. We are the point of view of equity shareholders. This is actually both of these satisfies from the point of view of company. The question needs a little rephrasing. Non-deductible expenditure is also from the company point of view. Possibility of management in interference. Uh, this is from the company as well, and that too from the area of equity shareholders because the shareholders do not participate in management. The people who are participating in the management are not shareholders. Matlab the true owners are not managing the business. So everybody who has the business will always be more vigilant because it is their money. Nobody else is going to use that money. So in this case, it is a little more challenging. Okay. What is the characteristic of term loans? Uh, what is the characteristic of term loans, everyone? Are the term loans long term or short term? Term loans are basically the loans which are taken for a longer period. है ना? Repayment is not required. Short-term loans are repaid within 10 years. Rates are determined based on the short-term prospects or used mainly for working capital needs. Achha, when we talk about this, the repayment is made towards the area of, that's not a short-term loan. Rates are determined based upon short-term. Uh, Term loans are basically the loans which are basically something which the rates are determined based on medium to long term prospects. It is based upon only and only the long term prospects, not short term. So actually, this was not there. There has been some issue. The answer has to be medium to long term. Term loans means the long term ones. Benefits of taking these loans, very beneficial because ultimately you just have to pay off these loans and you don't have the pressure to pay it off right away. You can take 2 years, you can take 3 years, you can take 4 years, you can take as many years as you want without any fuss and fuss. You know, that is what you would want, that there is no pressure on you when you're taking these loans. Acha, next is working capital term loan, WCTL. When we talk about working capital term loans, why would you take it? The working capital term loans are taken because of only one specific reason. That is, you are trying to run your business, right? You have to pay electricity expenses, water expenses, all those expenses has to be paid. So in this case, a long-term loan against fixed assets, a short-term loan for working capital needs, a type of normal term loan given by any bank, or a loan against personal assets. Working capital term loans are those loans which we have taken on the area of short term loans, basically just to meet your daily needs of the organization. Because the daily needs of the organization includes many things: salary, electricity, water expenses, as well as the regular working of the organization. They have to pay wages, they have to pay for repairs and everything, है ना? ठीक है? Done? So in this case, the answer is SHTP only, the short term loan for the working capital needs. Done? Chali. Then let's end our session here itself, everyone. Now, the most important part, if you haven't enrolled yet, the sale is going on. That means you have a very limited time period and you should utilize this time period to get this particular course. Acha, this is our website www.adda247.com. Go on to our website and go on to the area of CIB June 2024, and this is where you will find our courses. You can take up our resolution batch. This is our resolution batch. It is starting. What you can do is click on the area of Y541 and you can purchase all the 4 subjects for 80% discount for 6173.79, where you will get 400 hours of live classes, 111 test series, as well as 150 ebooks. So all these things will be available in the resolution batch. You can also take up the Mahapack, where you will also, this particular thing will also include the revision batches that we are coming up with, as well as the optional subjects are all covered in the Mahapack. So if you're looking forward to it, 80% discount would be there if you have downloaded the app and utilizing it for your benefit. So hurry up and get this particular Mahapack as early as possible, or the resolution batch, so that you can reap out the maximum benefit. So I'll be meeting in the next class. If you like this particular session, click on the area of thumbs up, and that is to like the session as well as to subscribe